Our first company for today's webinar is Empire Energy Group Limited. Empire has an ASX code of EEG and has a market cap of approximately 300 million. Empire Energy is a Sydney-based Australian oil and gas company holding 100% owned and operated assets with unconventional targets in the Northern Territory Beetaloo Sub-basin and central trough of the McArthur Basin. Presenting today is Managing Director Alex Underwood. Alex, welcome back to the network, and over to you, mate.
Thank you, Manny. Great to be here, and happy Friday to everyone out in Share Cafe land. So Empire Energy, we are one of the main companies operating in the Northern Territory's Beetaloo Basin, and I'm very excited to be presenting to everyone because we are in a pivotal phase as a company, moving from the explorer phase into producer to add desperately needed gas supply into the market. First, I'll just on the next slide take you through our corporate overview. As Manny mentioned, we've got a market cap of around $300 million. We recently carried out a highly successful cap raise, which was supported strongly by existing shareholders and also some highly technically proficient US investors who understand the drivers of value for shale gas. And amongst those largest shareholders, we have Paul Fudge of Pangaea, a highly successful Australian unconventional gas entrepreneur, Brian Sheffield, the founder of Parsley Energy, a highly successful West Texas shale gas and oil developer, Dale Elphinstone, one of the key supporters of Queensland Gas Company and a director of that company for 9 years, and also Liberty Energy, one of the largest providers of fracture stimulation services in the United States. Turning to the next slide, I'm just going to take you through some of the key drivers of value for our company. So first of all, the Beetaloo is unequivocally the largest gas deposit in Australia. This deposit in just one of the 4 stacked pay zones contains over 500 trillion cubic feet of gas in place, so many multiples the size of the Northwest Shelf. We have millions of acres of land within that position, and we own all of our acreage at a 100% working interest. Moving to the next slide. We have had our resources assessed by Netherlands Sewell, arguably the most credible resource assessors in the oil and gas industry globally. They have assessed that we have over 47 trillion cubic feet of recoverable gas. We've converted 1.6 trillion cubic feet of that to 2C contingent resource with very limited drilling. The very early stage drilling in this basin so far has clearly demonstrated that it is commercially viable. Just a week ago, some very exciting news for us was that we signed a major gas sales agreement with the Northern Territory government, and we are focused on delivering gas into the local market by the middle of next year. Moving on to the next slide. This shows a map of all of our acreage in the Northern Territory. So we have over 26 million acres under lease. Our focus is on the Carpentaria project on the eastern side of the Beetaloo Basin right now. And we're very fortunate that we have both highway and pipeline infrastructure connecting our projects, which will help us develop the projects. Moving to the next slide. As I mentioned, this is a stacked pay, and there are incredibly thick shale gas pay zones within the entire basin, but particularly in our areas, and that's going to drive productivity. Moving on to the next slide. The benefit of having a stacked play like this is that when we move into development, we will be able to drill a lot of wells from each pad. That reduces surface disturbance, but it also drives the economics of the project. A lot of comparisons are made between this basin and the Marcellus Shale in northeastern America. That basin has driven an incredible boom in activity, incredible value creation, but also the cheapest gas prices in the world for North Americans. As you can see on the left, the log section shows the Marcellus, which is only typically in its net pay zone around 20 metres thick, whereas we have these multiple stacked zones. our focus is on the Velkerri B, which shows some of the strongest geological characteristics of any shale gas basin in the world. Moving on to the next slide. So this is a zoom in now on our Carpentaria project. We've been highly capital efficient in the way we've gone about de-risking the project. So we've done 2 seismic surveys, we've drilled 2 vertical wells, we've drilled 2 fracture stimulated horizontal wells, and that has got us to the position now that we are ready to move into pilot development, putting gas into the McArthur River pipeline that you can see running right through the middle of the tenement. Moving on to the next slide, a bit more on our pilot project. So our goal is to be producing gas from the middle of next year. We will be tying in the 2 existing test wells that we have drilled, Carpentaria 2H and 3H, and we will be drilling a fully funded and very exciting well, Carpentaria 5H, our first full-scale pilot development well later this year. We have acquired a gas plant from AGL, which was producing gas on Sydney's outskirts at a knockdown price, which dramatically reduces our capex to first gas. And the government, which owns the local pipeline, has already installed the connection into the pipe to allow for rapid commercialisation. Moving on to the next slide, I'll tell you a bit more about this really critical well, Carp 5H, that's coming up. So it's fully funded, it's being drilled this half of the year, and we've learnt a lot about how to drive productivity on our first 2 wells. This will be a 3-kilometre horizontal section. We're increasing the diameter of the pipe in the horizontal section, which will allow us to create larger fracture networks and extract more gas. Moving on to the next slide. We have learnt a great deal from the first couple of wells we've drilled, and we'll be optimising our design in this next well. So as I mentioned, larger diameter pipe, a longer horizontal section, that really drives development economics and efficiencies. We've tried lots of different stimulation strategies. We've now nailed down the optimal strategy which we'll be deploying, and we see that can create a platform for productivity increases. Moving to the next slide. This pilot project is quite material for us, 25 terajoules a day. If you were to use a hypothetical price of $10 a gigajoule, that's about $100 million a year of revenue. But this is really just about proof of concept. The resource base in the Beetaloo is absolutely enormous and a very low CO2 source of gas. And so we foresee that this basin will be very important in years ahead to resolve the shortfalls of gas on Australia's east coast and ultimately providing energy security to the people of Asia through enhanced LNG export. And I note for that matter that Darwin is already a major export hub to Japan. It sold about $7 or $8 billion worth of LNG to Japan last year. And, we think we can play a critical role in supporting growing economies to Australia's north. Moving to the next slide, we are very focused on our ESG responsibilities. This will be the first project in Australian history where all Scope 1 emissions will be offset from the outset. The fact that we have such low CO2 in our reservoir will definitely reduce the cost of offsetting those emissions, but also we are very focused on working very closely with the local communities and the traditional owners on whose land we operate. We've been working with the full and informed consent of traditional owners for the last 12 or 14 years, and we're going through an approval process with traditional owners to sell gas rather than flare it. And we also have very close relationships with pastoralists who have given us their consent to operate on their land. Moving to the next slide, gas is a pretty interesting topic in the political debate these days. We've got certain political parties I won't name who think we should just shut everything down and hope that solar panels and wind turbines will drive our entire economy. This transition is going to take a very, very long time, and we are very pleased to see that both the federal and Northern Territory governments have shown their strong support for this project. Gas is a critical supporter of renewables because the sun doesn't always shine and the wind doesn't always blow. And with gas having 50% or thereabouts of the emissions and intensity of coal, It provides the perfect complement to renewables to ensure that our economy keeps running. And we've been very pleased with the support we're seeing from both levels of government. Moving on to the next slide, I cannot understate how critical increased supply of gas is for the Northern Territory market. There's a field called Blacktip, whose production is dropping precipitously. The problems of Australia's East Coast market are very well known, and demand for LNG into Asia continues to grow at an extraordinary pace. So we see very strong demand for our gas in years ahead. We're getting close to the end here. So next slide, just a bit on this agreement we signed with the NT government last week. So you can see in this photo there, there's my chairman, Peter Cleary, Chief Minister Eva Lawler, and NT Resources Minister Mark Monaghan with me, signing a major gas sales agreement with the NT government last week. This covers the full volume of our pilot production. It's a 10-year contract. I can't disclose the pricing, but it's attractive pricing for us while being affordable for the Northern Territory. And also we are giving the government the option to buy 10% of our gas if we get to larger development scenarios for an additional 10 years in order to support their economic growth. Just moving to, I'll move forward 2 slides because I'm out of time. So just a quick summary about the overview of the value proposition. So we're moving into production this year. We're going to get up to 25 terajoules a day over the next couple of years. First revenue in the middle of next year. That will allow us to mature our understanding of the resource. We've got all the pieces coming together now. That'll allow us to springboard up to much larger volumes to put more gas into Australia's East Coast. And ultimately, there is ample resource to support LNG export development. So, Manny, I might pause there, and if there's any questions, I'd be very happy to answer them.
Alex, thank you for that. That's great, and congratulations on the sales agreement, mate. That's fantastic news. A couple of questions, though, for you. In terms of the gas sales agreement, so you're going to deliver some gas to the Northern Territory government. Great. Can you just talk to us a little bit about the infrastructure that's already in place, what you're going to need to deliver that first gas? And you did touch on it, but can you just remind us again, when do you anticipate that first gas getting to the Northern Territory government?
Yeah, so it's very serendipitous that the area that we are targeting just happens to have a pipeline running right through it. It's not a huge pipeline. It was built to supply gas to the McArthur River mine, which is about 80 or 100 k's to our east, owned and operated by Glencore. Currently, that's taking about 9 or 10 terajoules of gas a day. But under this agreement, we will be able to fully supply the mine, but then send about another 15 terajoules a day into the local market. To put 25 terajoules a day into perspective, Darwin is 80% powered by gas-fired power stations. This would be equivalent to about 50% of the electricity demand for the Northern Territory. So it's quite material, but it's really only just the start, as I mentioned. We can be delivering many, many multiples of this in future. So we've got a very easy infrastructure path to development. We've got the second-hand gas processing plant we bought from AGL that will be installing right next to the pipeline after the wet season, so in about April of next year. And so it's a fairly easy path to pilot gas being on that pipeline. And the target, which I think is eminently achievable, is the middle of next year for first revenue.
Okay, fantastic. And can I ask you, you mentioned the stacked play. Does that extend across the Beetaloo Basin, or is that particular to Empire?
So it does to general degrees across the basin. Not all areas have all 4 of these stacked zones. We do in our areas. You know, I think a good comparison is what happened in the Permian Basin in West Texas. So the Permian Basin has multiple layers of productive oil and gas horizons. And what that means is you can drill horizontal wells into multiple horizons, which really improves your development economics because you're not out building more pads. You can centralize a lot of the, say, water handling facilities and so on. And, you know, it's quite value accretive for our shareholders.
Okay. All right. Moving on to the next question then. It's around the comparison with the US Permian Basin. You've touched on it. You've mentioned it, and the Americans often quote value per acre. So we're familiar with that concept. What value per acre, if I could put you on the spot, what value per acre could be estimated for the Empire Carpentaria lease?
Well, I mean, where it could go is probably a question better answered by analysts, but I can certainly provide some context. So earlier in my career, I was actually involved in financing the US shale industry. I worked at Macquarie for 10 years in their oil and gas team. And we were involved in the quite early days of shale gas and then shale oil in America. I remember in certain areas, acreage initially was sometimes valued at $5 to $100 an acre. And indeed, our own company, just by pure luck, happened to have acreage in the Marcellus Shale. We were producing from shallower conventional horizons. We bought that acreage and basically paid nothing for the shale rights in 2006. And then a couple of years later, we sold that acreage for $4,250 an acre. In the Permian that has the stacked pays, people will pay up to $80,000 an acre. So big dollars. To put it into perspective, if we were to completely ignore all of our McArthur Basin acreage and just look at the 1.1 million acres that we have in the Beetaloo, we're looking at around 300 Aussie or 200 US an acre. So, there's very large upside as we de-risk this resource.
Okay. All right, Alex. Well, one more question before you go. Just on now, there's a pending Northern Territory government election. Is that there's nothing for us to be concerned about there? There's no there's unlikely to be any impact on certainly on Empire and the Beetaloo.
I mean, when you run a gas company, you need to worry about election results. But I must say, this election is probably the one in which I have the least concerns. And the reason for that is that in the Territory, you have the Country Liberal Party, which is effectively the same as the Federal Liberal Party. And then you've got Territory Labor. It's Territory Labor that's been in power since 2016. They put a moratorium in place in 2016 to make sure that this could be carried out safely. They lifted it in 2018. I think it's one of the only places in the world where a ban on fracking has been lifted. And they've been incredibly supportive over the last 6 years. And that's really demonstrated in last week's announcement of a major gas sales agreement. Similarly, with the Country Liberal Party, they have been very overt in their support for our industry. And they are really, both parties see this as being critical to the NT's economic future. So I've got very few concerns about the election.
Alex, thank you. Thank you for that today. That was fantastic, mate. Thank you. Have a great weekend, and we hope to get you back soon.
Thanks, mate. Same to you. Cheers.
All the best.